So great. Now let's go straight to the board. We said that the core issue with this paper is the preparation and the presentation of financial statements. So today we are going to look at that concept. So preparation and presentation. Hope you can see this section good of financial statement. Please, no shortcut in exams. No shortcut in exams. Good. Now, what are the specific requirements or specific regulations covering the preparation and presentation of financial statements? Now, the company's code is a source of what? Regulatory body or the source of law that covering the preparation and presentation of financial statements. So the company's code, so that's the Companies Act 2019, Act what? 992. It prescribes how the financial statements should be prepared. It mandates all companies to prepare financial statements. So that's the source of authority. So now your examiner will ask you, if the company's code break out the items, the sub items or the basic financial statement that should be in the set. Sometimes you hear the examiner saying in compliance with the Companies Act. So that is it. The Companies Act mandate us, give us what? The authorities, a source of legal backing to prepare the financial statement. Good. Then the IFRSs also give us what? Instruct us on how to prepare the financial statements. So I'll be seeing the difference.
Yeah.
This one will help you or give you the specific word treatment or the requirement of the financial statement. Good. And then the company's code will give you the legal backing. So if you see the examiner saying prepare the financial statement in accordance of the Companies Act 2019, Act 919, or the IFRSs, that's the meaning. The IFRS give you how to treat the specific issues in the financial statement. And then the company's codes give us what? The source of legal backing. Good. Now let's go straight. If you pick a complete set of financial statements, what is their composition? What's the consequence? Then you are done. So let's see. So component of what? A complete set of financial statements. A component. So one, it comprises of comprehensive income. Comprehensive income. Comprehensive income. Two, changes in equity. Changes in equity. Then third one, financial position. Then the statement of what? Cash flow. So cash flow. Cash flow. Then finally, the notes. The notes. For examination purposes, the notes are what? The workings. For examination purposes. Good. Now, if you pick a complete set of financial statements of every or published account or company, you will find these five key items in. So when you pick a complete set of financial statements, it should comprise of these five items. So first, the comprehensive income, changes in equity, and then the financial position, then the cash flow, The notes, let me start from the comprehensive income. That's the profit and loss account. The full version is statement of profit and loss and other comprehensive income for the year ended. So that is the comprehensive income. So that one explains your performance, your operating performance in terms of what profit or loss. So we prepare that one to reflect your profits or your loss that you've had during the year. That is the purpose of the comprehensive income. So, in simplest terms, all revenue one side, all expenses one side, then you get a profit. You are done or loss. That profit or loss. That is how we prepare. In fact, everything that is so easy and simple to say revenue and its expenses. But because there are different types of revenue, different types of expenses, and in the structure, at each stage, which type of expense do we add and do we subtract? So as a result of that, it makes the preparation a bit difficult, but you'll be fine. That is it. So that's the performance. In the public sector, they will call it statement of what performance for public sector because they are not in there to make profits. Good. Then changes in equity. At the inception of the class, we talk about equity, right? Good. Equity. The owner's what? Funds that which has been supplied to the entity. So from January to December, transaction and events has occurred. Will it affect the owner's equity? Will it increase it or to decrease it? So that's the effect on owner's equity. Then the financial position. The financial position talks about your assets and then your obligations. Assets and what? Your obligations, like your liabilities. So asset, all asset one side, all liability one side. These are all of these are classes. The three types of asset that we learned, current and then non-current. And then the two types of liability, current and then non-current. Good. That's fine. Then you come to cash flow. In fact, this cash flow is a simple man. What you have been expecting. Cash flow will explain. Listen, sometimes profit is not equal to cash, right? Or is equal to cash? Profit is equal to cash. Or they are the same. Profit and cash are they the same. Profit and cash. Okay. Now, company will make a profit of let's say 100,000. Accountant will declare profit of 100,000 for the maybe for the month. And the owner will ask, Mr. Accountant, what's our cash balance? Boss, the cash balance is 10,000. Ha! Mr. Accountant, where is the remaining 90,000? I say we made a profit of 100,000. So, to explain this, we cannot tell the buzzer boss. We had 20,000, we bought this, now left with 10,000. We have to prepare a statement, detail the transaction of cash, right from the beginning to the end. So cash flow statement just explain the cash movement, move in and out of the organization. That's the cash flow statement. And it provides the basis of reconciliation between profit and cash. Good. Finally, let's go to the notes. The notes in reality, they are the accounting policies or disclosures or any material item that the directors want to disclose to the owners or the other shareholders. So accounting policy, what's your depreciation policy based of assumption? Yes, how and then the other information. So that's the notes. But for examination purposes, the notes are the workings. For examination purposes, good. The notes are our workings. Now this is the structure. of the exam. The first three is one set. First three is what? One set. So one full question, valid for 20 marks. This guy is also another set, valid for what? 20 marks. So it tells you that this topic is not a small topic. 40 marks, yes. Just that at a time, you can bring just one set. And all of them move with a note, with the workings. You can't do cash without the workings, you can't do this one without the workings. So all of them move with it. So that's the game. So we will be throwing more light on the cash flow. Yes, very much on the cash flow because these have dropped three consecutive times. Three consecutive times. Starting from April 2019, November 2019, April 2020, three consecutive times in the same part. So if they are one and two, then this have come, then cash flow she will do us a favor. That's the thing. That's good. Now let's start with the game. Now all of them have a format. And please, that format, let me repeat that format. They've paid money, they've spent time, energy, intellectual property, other resources to draft it. So it's even a good news for you, right? That what I'm going to do is a standard version. Please, not because our exams are difficult or we are not seeing top in exams, we should swap the format, change it upside down. Yes. Now when you see it, our hearts, it's like you maybe you've taken 1,000 years to draft something, to sew some dress, and when you realize that one of your kids is like using it as a rag. How will you feel? You won't feel okay. The same thing. So please, this format, let's go by the format. It's a standardized approach. But when the financial statement preparing in all countries should be the same. Exam too must be what? The same. Good. So that is it. Now let's see the format. So I'll walk you through the format first, and then from there we will start our first illustration, and then that's all we are done. Now the three protocols over here they are very important. Three protocols. The three protocols. Before you tackle every question, that three protocols are very important. Three. First, the name of the company. The name of the company. Name of the reporting company. The requirement. And then the reporting currency. Reporting currency. In our case, it will be what? CD. Because our functional, most of our functional representational currency is the CD. So it will be CD. These three items, they are free marks. So kindly don't forget that by them. So first, the name of the company will come. The requirement is the comprehensive income that you're going to prepare. Then you are done. So let's see. So full version. I can write a full version and write a shortcut how they will ask you in exams. So it's called statement of profits or loss. Profits or loss and other comprehensive income. Other comprehensive income. Comprehensive income. Comprehensive income for the year, please. This one is very important. For the year ended. For the year. For the year ended. Then you go the date there. So maybe 31st December, but 2000 and what? Maybe 2019. Good. So whichever year that the examiner quotes from you, you be the same thing there. Then you are done. Good. Now the shortcut version of this, they can end it here. Statement of profit or loss for the year ended, or statement of comprehensive income for the year ended. That is it. Good. So for the past three statements, you guys have not been calling it statement of comprehensive income. So you will start by saying statement of what? Of comprehensive income for the year ended. It's still the same. Still the same. Or you can also call it statement of what? Profit or loss for the year ended. Still the same. Good. But this is the full version. How we get it. That's fine. Now let's see. So the name of the company, maybe it was Akuska Limited. So you write Akuska on top. Maybe Adom Limited. You put Adom Limited on top. Maybe Insura Limited, right? Then you put it here on top. Good. Now, right, there are three: the name, the requirement, and then the reporting currency. Then you check whether you're reporting in thousands, in millions, or just a flat currency. So we record it here, Ghana cedi. If in a trial balance, the examiner has raised three zeros, you have to also raise three zeros. If you have not raised any three zeros, do not raise any word three zeros. How we get it? Good. So that is it. So these are the three protocols. Now let's go. If I want to prepare financial statement or the P&L, what will be the first item? We said that basically this statement are going to look at two items: revenue versus what? Expenses. Just that there are so many types of revenue. In fact, there are two types of revenue. There are two types of expense. We have the direct expense and what? Indirect. Yet to direct and what? Indirect. That's all. This make the financial statement preparation a bit troublesome. If not, it will be very easy because all expenses one table, all revenue one table. Just look at them, you are done. But that's not the format. That's not the format. So now let's look at this. So first, we look at the direct portion first. So it's sales revenue. Sales revenue, which can also be called revenue or turnover. Turn or over or net sales. So sales revenue. So that's so much. Sales revenue, so much. Sales revenue, so much. So that's the first. Now this sales revenue, they are the one that we explain under the conceptual framework. We explain revenue, right? Over there, the real items, revenue. So that is it. That is the direct revenue. Good. Then you go to the direct expense, we call it cost of sales. So cost of what? Sales. All expenses, you put them in a bracket. You are subtracting. Good. This year we don't want to see something like this. You writing 32,000. If you are lessing something, you write a less here. 20,000. You are adding something, you write a plus here. 10,000. Please, we don't want to see this. We don't want to see this. If you are subtracting, put it in a bracket for us, okay? And we know that we are subtracting. If it's positive, leave it like that. Underline it. Or you can use less. So if you say less, meaning you are subtracting it, good. So something like this. That's how we want our format to look like. How we get it. Good. Now let's see. So cost of sales, we will go and look at the calculation of the cost of sales, the workings. That's the first workings that we will do. Now, after subtracting cost of sales from the revenue, the remaining part is called what? Gross profit. So our profit. Gross profit. Good. Great. Now we call it gross profit. In fact, technically, it is a direct profit. This is direct revenue, less direct expense. So this one will be what? Direct what? Profits. So that we call it what? Gross profit. So the direct section, that is it. Yeah, all what you have to do is we have to know how to calculate the cost of sales you are done. That's all. This you don't need to do any workings. They'll give it to you straightforward. Except for few times that we normally affected with some issues. How we get it. But most often they are free. So the issue now with the cost of sales. And the calculation of cost of sales too is not many. So indirectly, this guy is not difficult. Good. Then right from the gross profit, then you come to your indirect expenses and your indirect profits. You add all of them. Good. Just that the indirect expenses, there are only two which are permitted by the standard to be included or to be shown as line item. They are this one you don't write it, I'll do some adjustments. Yes. So they are admin and general expenses. Then you write it here so much, then you put it in brackets. Then you come to selling and distribution what? Expenses. That one's the same thing. You put it in bracket like this. Now, here there's a danger. The danger is that all the expenses given to you in the trial balance, you have to arrange them or you have to match them between admin and then selling and distribution costs. Some of the expenses you have to determine whether it is admin or what distribution. Yes, and then sometimes find it difficult. So let's assume that you did your arrangement and you had admin 20, selling distribution is 50, the total is 70. Meanwhile, the total is correct, but individually, uh, there was one particular item supposed to be for admin. You placed that word at distribution. So that means to affect individually, you are wrong, right? But the total is correct. Okay. Assume that you're supposed to be, let's say, 30 and you're supposed to be 40. There's a now marking down because I cannot see 30 there. How we get it? Good. Then I'm saying that can we take a comprehensive insurance on this? Yes, there's insurance here. How? Now why can't we go and do working somewhere? Showing all this in one vertical working and present the 70 here. How we get it? So that I'll get a 70 correct here and the way I mark the individual one also for me what? Correct. How we get it? So it means that we are going to now take an insurance cover. Good. And call it what? Operating expenses. Operating what? Expenses. Or if you don't like the operating expense, you can also call it what? Selling general and distribution costs. So you can put all of them together. But normally I like operating expenses. So I'll put it here. So we shouldn't forget that our operating expenses comprise of what? The admin and what? The selling and distribution cost. Uh-huh. That is the second workings that we will do. So on the first like this, I will go and explain workings one and then workings what two. These two items are not free. They are not free at all. Good. Then when I take it off, what's the answer that like it? You get what you call operating profit. Operating what? Profit. So how do you find operating profit? So what's the formula to find operating profit? What would be the formula for finding operating profit? Mm-hmm. It's gross profit less what? Operating expenses. Oh, then that's all. Yeah, I don't know. And I know that gross profit is equal to sales minus what? Okay. And so sales will be equal to I like that to be given to you in the question, but that's absolutely correct. Yeah, to be given to you in the question. Don't my friend in these questions. Good. So that is it. Then from there, this profit is one of the important. But this profit coming from our operations direct. Then we add the indirect revenue. That's the other income. That's the indirect what revenue. We call it other what. This one is coming from the core activity. This operating profits come from where? Core activity. Profits from our core activity. And sometimes we earn additional income because we take advantage of some of the opportunities that come on our way. For instance, we are buying and selling, let's say, tomato. Just in front of our shop, there's some small car park there, so we decided to create a car park. For it's a busy terrain, so people come and park their car there for an hour, 2 hours in charge there, and it's giving us money. Meanwhile, we did not register our business to be setting up a car park, right? Good. So that's other income. Now here, I'll list all the other income that may few of them. For there are many, in reality there are many. So other income, one, investment income. So examples of other income they are investment what? Income. Two, interest. Interest or dividend received. Interest or dividend received. How we get it? Good. So examples of other income, they are investment income. Anytime you probably take advantage of fixed deposits or treasury bills and then you earn income on it, or interest, you're giving out facility or loan. Meanwhile, you are not savings and loan company, but you've advanced some money to a sister company and you are charging interest. So they pay the interest. Good. It must be what added to your other income. That is not your source revenue because you don't sell interest, you don't buy interest. Good. Then the third one is profits on sale of PPs. Profit on sale of non-current assets. Non-current what? Assets. Anytime you sell off or dispose of your PPs, that is the property, plant and equipment, the non-current assets. Example, land and building, plant and machinery, motor vehicle. Anytime you dispose any of them and then there's a profit loading, that profit goes where? Goes to other income. What if the loss? It's a loss, you have to operating expenses. So when we sell non-current assets, two things will happen. Either you made a gain or what? Small loss. So what do you do? If it's a gain, add it to where? Other income. What if it's a loss? Add it to operating what? Expenses. Sorry, it's operating expenses. Add to operating expenses. How do you get it? Good. Then the fourth one will be fair value gain on investment property. Fair value gain on investment property. So fair value gain on investment property. As we look at it. Investment property. That's good. How we get it? So that is it. The other ones. It can also include rental income. We also talk about rental income. Rental income. So these are, in fact, these are not all. These are the common ones that you may see in your exams. Common ones. Uh-huh. So that is it. But the idea is that any revenue or anything that you have received in a form of revenue, but it is not in line with your core activity, it must be accounted for here. How we get it? So, if you are probably a bank, your core purpose is giving finance and accept deposits. So, any income that you made aside this, it must be accounted for in what other income. So that is it. Now let's continue the game. So now you know the composition of what? The other income. Good. Good. Now when you add it, then you get what? This is a proper profit. We call it profit before interest and what? Tax. Profit before interest and tax. Can you take this section? I'll take it off soon. I'll take it off soon. Good. Okay. So you will get a profit. You will name it what? Profit before interest and what? Tax. This one is allowed. This shortcut here is allowed. But this one we understand. Profit before what? Interest and tax. Finance students normally call it earnings before interest and tax. So EBT, EBIT, earnings. In fact, earnings and profits are the same, and then they are equivalent to what? Retain. Retain. Good. So that is it. Now, if you are going to Kaswa, if you are going to Kaswa, and you inform me that you are before Odoko and Malam Junction, where are you now? Tell me. Okay. If you are going to Kaswa and you are before Odoko and Malam, where are you now? Kaneshi, right? Okay. Yeah, before Malam, right? I'll take that one too. Friends online, any idea? If I'm going to, let me take it this way. This is Kaswa. I'm going to Kaswa, Kas City. And you are before, in fact, if I do the grammar line, you answer it quickly. The solution will come. In fact, you say Malam, right? Yamicha Junction. I like that. Yamicha Junction. It means that you know the route, right? What if this one, someone that don't know the route, how the person answer this question? If I had it correct, you are what? Odoko. Before Odoko. Because you are before Odoko and what? Malam. So you are the next junction is what? Odoko. How do you get it? So if this profit is before interest and tax, what will be the next item? If we are before Odoko and Malam, then we are going to meet Odoko, right? That's the next junction. So that means the next item is what? Interest. So if this profit is before interest and tax, then the next item that we have to consider is what? The interest. What about the next one? Perfect, we are done. And it ends the game. How do you get it? So right after Odoko, you get to Malam, and from Malam, then that's why exactly that's when you don't know the route. Good. So the next item is the interest. Just that we have given it a nice name. We call it finance cost. Finance was cost. But you can also write the interest expense. So it's correct. So finance cost. So much. It includes all interest. Example. Examples of finance costs. Interest on bank loan. Interest on what? On bank loan, bank interest, interest on overdraft, in fact, all interest. It includes unwinding of a discount, unwinding of a discount. Yeah, it includes unwinding of a discount, unwinding of discounts. Good. I'll explain that, but not now. When we start with the standards, and then you'll be fine. Good. Okay, so now when I'm done, just that here there's implicit trick here. I'll walk you through on how to drive that figure, and you'll be fine. In fact, we are drafting the format ourselves. Oh, have you seen? So when you go to the exams, you won't bypass this. Good. What will be the next profit? Who can tell me the next profit? The next profit. So if this profit, we've taken finance cost from it or the interest from it, then that profit is what? Now you are before what? Tax goes. So this is called profit before tax. Profit before tax. So much. How we get it? Profit before tax. Profit before tax. Good. In fact, friends online, can we get it? Okay, I'll come and continue like this. I'll continue this section here. So I want to continue here. Let me continue here. I'm just assuming good. Now, the next item was tax, right? Yes, we call it income tax expense. Don't assume I'm doing it here. Income tax expense. So much. You put it in brackets. So, continuation from here. There's no space here, so I want to continue from here. Thank you. Good. Then, now we've reached. So now we are what? After what? Odoko or Mala. When you go to Castle, are you after Odoko or after Mala? After Mala, man, or after Odoko? After Mala. Thank you. Cool. So that's profit was after Mala. Profit after tax. So anti-tax. Profit was after tax. We also call it profit for the year. Profit what? For the year. That's another name for it. Profit for the year. So profit for the year. That's great. Profit for the year. At the basic level of financial accounting, we call it what? Net profit. Net what? Profit. So that's the net profit at the basic level. But now we want to give it a nice name. Profit after tax or profit for the year. That one sound a bit like heavy than net profit. Ah, good. So how we are getting it right? Then what we are going to do is the adjustment section. Then you write other comprehensive income. Please, no shortcuts. Other comprehensive income. Other comprehensive income. Other comprehensive income. OCI. Please, no shortcuts. You see me doing this? No shortcuts. Other comprehensive income. OCI. Then you underline it nicely. Good. Then what are the items that comes here? Some of the items they are not needed in the profit and loss statement, but they relate to our performance, but they are not needed. So what do we do? Those that they are not needed in the profit or loss, then let's group them and call them other comprehensive income. How we get it? Good. Now, what's the difference between the full name is other comprehensive income, between other comprehensive income and there's other income here, right? The only difference is what the comprehensive, how we get it. Now this one is a realized gain, something that is earned it, but does not form part of your core purpose. Good, that's other income. What about other comprehensive? Now the word comprehensive means in fact it's a technical gain, it's a notional gain or ideal. For instance, you were there and then you said that I have a vehicle. The value of the vehicle is let's say 50,000 cedis on the market. 50,000 cedis. Good. Now this 50,000 cities. Meanwhile, in your book, you have stated that let's say 40,000 cities. So are you gaining or you are losing? The book value. This is the book value and this is the market value. You have a vehicle, the same condition, the same spare parts, everything the same. On the market going for 50,000. But in your book, you are valuing at what 40,000. Are you gaining or you are losing? Thank you. So say it's gained by what 10,000. In fact, have they given you the money? Have you received the money? Have you earned it? Will they come and then increase your profit for you? No. So those gains are not like real. They are notional, ideal. They are comprehensive. So now let's group them and bring them somewhere different from the real earnings that we made for the year. Because if you go and tell the owner of the company that you've made a gain on this, he will laugh at you. That your asset that you are having, the value is 40, but you are on market going for 50. Oh, then you are gaining because if you should sell them today, you will sell it at what 50,000. But the truth matter is, have you made a sale? No. So it's not a gain until what we will pass it on how we get it. So that's it. Great. So what I did, we call it revaluation gain. So we will call it here revaluation gain. So you bring it here so much revaluation gain. Now there are so many items that goes to the other comprehensive income, but for the purpose of our studies, we are going to be limited to the revaluation gain. So if it is a gain, it will come here. If it's a loss, operating expenses. So like the reverse. If the book value was 60,000, book value is 60, market value now is 50. Are you gaining or you are losing? You are losing by what? 10. And here, there, they are saying that this lose or this loss is real. Yes, this one there is real because something that they are selling at market very cheap. You are carrying that high in your books. Oh, come on, reduce the price. You are losing. So that one must be where the operating expenses. Have you seen the difference? Don't mind us saying. So that's how we do our calculation. So when you calculate and it's a gain, it must come close. Like if it's a loss, go to operating expenses. We are done. Now, when you add these two together, profit for the year or the profit after tax plus the total comprehensive income or the other comprehensive income, and we call it what? Total comprehensive income for the year. For the year. So much. Then you double underline it. That's the end of the first month. We are done. Any question? So that is it. Then we will go through the statement of the financial position, the former two. But for change in equity, when I start the adjustments, I will do that. So we are going to the financial position and then draft the format to ourselves. So now that we have drafted the format by ourselves, it means that in fact we are comfortable with it. And this is how we want the format. In fact, the examiner can make changes in it. For instance, have you seen how we show the operating profits? I can change this guy from here. It's still the same. Have you seen it? Has not changed the show. So it means that the gross profit less the operating expenses plus the other income still give us what? The profit before interest and tax. It has not changed anything there. So when you see something like this, don't get scared. It's still the same. There's no change the shape. What we don't want to see is you swapping them. Have you seen? Bringing this one down, bringing this one up. No, don't see that at all. So it must be like this. Or using the other version where we have two currencies or three. Then you show some of the workings. Please, here too, you are not allowed to do workings on the face. Because if you go and see a financial statement of a company that is not working on the face will be not be. It will confuse you. But for examination purposes, you are only allowed to do something like open a bracket, maybe 700 plus 2000 plus 300. Put the answer there, you are done. That one is allowed. Are you picking the whole section like this and doing workings there and push it? No, not, not agree. Each and every item must be shown as what? Line item, line by line. If there's any figure that you cannot do the workings as this, then go to the next page, go and do the workings, and make the final answer in. Refer the examiner, you are done. I'll be getting it. Good. In fact, this in reality is not even allowed for examination purposes. They are allowed because of time factor. Good. So now let's look at the statement of financial position. And then from there, we will start with our first question. And then we'll be fine. You're already fine. Great. Now let's see. Statement of financial position. Statement of financial position. I hope there's no question, friends, online. If you do have a question, kindly put it in the comment box. So I'll send hello to everyone. You will see in there. If you have any question, you can put there or use the reactions that you show up, and I'll allow you to voice out your questions. Or you can also share this, or you can even laugh. Yes, feel free. Yeah, that's great. Now let's continue to the statement of financial position. The statement of financial position. Here too, the name of the company must be there. The name of what? The company must be there. So first, name of the company. Second, statement of what? Statement of financial position. One is as at then you got the date 31st December 2000 and what 19. Good. And you are what? Fine. So take it. And now once you underline it, don't forget your currency. The reporting currency. Sometimes they don't know read three zeros. They're reporting in thousands of cities. So we check that from the trial balance. If you check and then the three zeros are not there, do not read the three zeros. Good. Now let's see. Now we said the financial position talks about, in fact, three items. We are going to use this approach. Asset is equal to what? Equity plus what? Liabilities. That is it. This is what we call a balance sheet. The statement of financial position, obviously the balance sheet. It's a sheet that record all balances on it. That's all. Here we don't record performance, consumption. No, what we consume must go to the P&L. Consumption must go to P&L. Any expenses that you incurred or consumed must go to P&L. But if there's leftover, bring it here. That one is a balance. Good. Asset, there are two types. That's the demarcation. Asset, there are two types. Non-current assets and what? Current assets, as we learned. The exception of the class. Liability to there are two types. What are they? Non-current liability and what? Current liability. That's the end of the game. So for financial position, this is what you are going to do. So all these two, one side, then you relax because you are going to cross to the other side of what? The river. This is the river Jordan. Good. Then when you go to the right side of the river, you have your equity. Yes. And then your liability. Just a liability word two, and you are done. How you get it? So all this, what we learned at the inception of the class, that is the composition of these items. They are the one you are going to see in your question. When you see them, just assemble them at one position. Yes, some of them they require some adjustments. Some of them too are free. I am choosing what the free ones. After that, the adjustment, you do it because they say you are expert in that. You'll be fine. Now let's see. So we are going to start with assets. So I started with non-current asset first. So I write here non-current assets. The current is not counted. Mine is faster than mine. Non-current assets. It's not composite and line it to exams. Time has not been done. We don't have an learning time. It's working time. Oh. By the time given to you, we have what? Reading time and what? Working time. So there's no what? Thinking time. There's no like unlearning time. No. And you see people, especially at the financial accounting level, they're using rule to take their time, do something like this. Straight. Do something like this. Straight. Uh, when I pick this one, I know where you're coming from. I know for sure that to be a lady, not a guy. In fact, time is not our side in the exams room. Please, I don't want to hear the story that please I did not finish. Time is too short. No. So this once you can leave it. It doesn't change anything. It's still the same. If you write current assets without underlining, it's not any bad news. That's all. Why if you want to underline something like this, you are done. Listen, no rule out because it takes some time. I want to underline again. Then non-current assets, you group all the tangible ones that are used in the business. They are called PPE, property, plant, and equipment. It right into plant and equipment. Because if you write PPE, that's the full meaning. Here, I'll translate it for you to be what? Personal protective equipment. Oh yes, to be PPE kits for the frontliners. So that's what probably you meant, and I'm working out for you. Obviously, that's good. So that's the full meaning of PPE. So that's the first thing. Then you look out for investment properties. Investment property. All of this one figure. In fact, this guy is a troublesome guy. Not go do workings on it. List all your tangible non-current assets that you are using in the business. You are using in the business. List all of them down, sum them up, represented by what one figure. Read it here for us. Investment property. Continue adding. Then intangible assets. Intangible what? Assets. We said that some of the non-current assets they are what tangible, some of them are what intangible. They don't have a physical character, yet they only exist in the form of what we see on paper basis. Physically, they don't have presence. Good. It includes goodwill, brand, patent, copyright, license, deferred development expenditure. They bring it. Then we come and then lastly, long-term investment. Long what? Term investment. Maybe you have 5 years investment with maybe some bank or some investment group. It's a non-current asset to you. Now you add all this together. I can assure you that this maximum of three must be in your question. Maximum of what? Three. Not all this. It's just in one question. Oh, maximum of three. And I can assure you that minimum of one is free that you have to carry. Then lift it there, put it there, you are done. So those stuff Do that one first before you start the wahala. Because if you start the wahala, it will take the time away and you might not be able to do your free max. This guy there, yes, I know that this guy is a troublesome. But still, we find a way of what moving around it. Nice. So this what total non-current assets. But I'll not give it a name. Then I'll go to current what? Current assets. Current assets. Then I'll line it as current asset. And the current asset, the big three, what are they? Any idea the current assets? What we talk about current assets? Any idea about current assets? Stock, right? Okay, good. Stock is also called inventory, right? Okay, that's good. So I write the inventory. Perfect. Then from there we go to so we continue the game. Then you go to receivables, right? Receivables. Then that one do the same thing. Remain there. Then you continue the game. Sometimes you may have short-term deposit or short-term investments in between 1 day treasury bill or any investment that it will mature within what one financial year. Within 12 months, you can go for your money. It's our current assets. Right? It go beyond 12 months, it becomes for long-term investment. Really. So short-term investment, should I write? Should I write short-term investment? In fact, all these you have to bring them. If you see them in a question, oh, if you're not in a question, where does now the next item that you have to look out for the short term within 12 months. Yeah, within 12 months. So any investment that will mature within 12 months is a short term. If you go beyond 12 months, it becomes what long term. Now go to Mandela. Then we have cash, cash at what? Bank, and then cash in hand. Cash in what? And good. So these are the two items. So basically, you put them there, you put them here, you continue, then you underline it. So this one becomes what? Current asset, right? The total current asset, but you don't name it. How we get it? Good. Even if you name it and the figure is wrong, it's wrong. Go. If you don't name it, the figure is correct, mark it correct for you. How we get it? So here we want to save time. Good. Then what will be the next item? Now we have total non-current assets. We have total current assets. So putting these two together, we call it what? Total asset. So let me take off the top part. And I take off the top part, friends online, so you can scan through. I'll take the upper part off, and then you'll be fine. Good. So wait. Okay. So now putting these two answers together, we will call it what? Total assets. Good. That one they won't be. Write the name first. For that one, write the name. So that one you double underline it. Have you seen? That's a River Jordan. That's a sign of what? River Jordan. Good. So that's the total asset. Then you relax for a while. Then you come back again to continue the game. Now we are done with asset. We are still using asset is equal to equity plus what? Liabilities. So what's the next item? Equity. So let's write here equity. Equity. And here we have to list all the equity items. All the equity items. What are the equity items? The equity items They are the one stated capital made up of the stated capital, which is also made up of what? Ordinary shares or the equity shares and the preference shares. So first, you record stated capital. In fact, if you write stated capital like this, that means it must be in the question. Stated capital. This one is made up of two items. So either we give just their family name or the individual items. This stated capital is made up of what? Ordinary shares and what? Preference shares. So ordinary share capital and preference share capital. So that's the stated capital. So in short, if you don't see stated capital there, then the examiner has to give us any of these two. So ordinary share capital, then you bring it. If there's preference shares, why not? You bring it. Preference shares, you bring it there. These two together are called stated capital. So anyhow the examiner stated, that's the same way you have to do it. So if in the question you see stated capital and you're writing ordinary share and you mark it wrong, you've not committed a crime, right? Uh-huh. Good. And if in the question it is ordinary share that we have stated there, then you are telling us that it's stated capital or it's preference shares, how we get it. So take note for what you see in the question, that's what you have to bring it. Good. Then you go to the reserves. So your retained earnings. Retained earnings. Retained earnings. So let me take this section off. Retained earnings. Your retained earnings, so much. But this one mostly for publication, your publication maximum of one. So only one, and it's the ordinary share or the equity share capital. Then you go to revaluation reserve. Revaluation reserve or evaluation surplus. I like the surplus more than the reserve. Evaluation surplus. Or it's also called capital surplus. They are the same. Capital or surplus. Just that your examiner like capital surplus. Capital surplus. Then I also like revaluation surplus. So two things. Good. Then you put it together. All the equity items. Then you get a total equity. Then you relax for a while. Then you come back. Tell the examiner that now you are the obligation section. So tell the examiner that you are the liability. So you write non-current or liability. Non-current liability. So that one to list all the non-current liabilities. We talk about what? Loan, right? Long-term loan. You have bank loan, so much. And then deferred tax liability. Deferred tax liability. Then this becomes the non-current what? Liability. Have you seen how the format is? Good. That's fine. Then you go to current liability. Current liability. You can line that one also. Then you start again. For current liabilities, you have payable. Payable, so much. Maybe expenses owing. Expenses what owing or bank overdraft. Can also have bank overdraft. Good. Now the balancing. Here there are two ways. The smartest one and then the long one. Let's see. We're supposed to have one figure representing what? A liability or the liabilities. So how do you get that figure? One figure representing all the liabilities. Mhm. That means we have to add the total for the non-current plus what current, right? That will give us what the total liabilities agreed. Because this is a non-current liability, that's a total, and this is a total for what current liabilities, right? But I suppose you should this one up a little. Or the arrangement has scattered, right? But has scattered the arrangement has scattered. But you should just write the current liability here. This one links to payable, so that's payable. And the next one links to expenses owing. Good. So therefore, this total is for current liability, right? So when you put the two together, okay, this and then this, that will give us what? Total of liability. So total liability. So therefore, what will be the total equity and liability? If you like to, we can ignore the total liability. Then we will go straight and now look out for total equity and what? Liability. So if you look, you're looking for the total equity and liability. This is the equity. One plus this one, two plus this one making three, right? Uh-huh. So that means if you don't want to bring the total liability, it's also allowed. You understand the exams maybe wanted to fast, want to move fast. So you can also do that. So total equity and what liabilities. Then River Jordan has come. So this one means by time even then to balance with this one for you nice. So this is the format. And we're going to take our first question. Now, I hope you know the game, right? And the rule for the class. If I do one, you do one. If I'm going to do one, now make sure that I also do one. So now I'll pick a question. That question that we are going to solve, it is empty, no footnote, no footnote, no adjustments. So they'll give you a trial balance. So you are going to recast the trial balance into what? Profit and loss and balance sheet. It must balance. So that's what you are going to do now. So you are going to now recast no footnote. So that if we know how to prepare them without any footnote, then we start adding the notes one after the other. By the time we realize, then we enter. Good. So that is it. Now let's see. So pick our first illustration. We will solve it well or success. Then you will do impromptu. So good. Now let's look at this question. I think I'll try the very first question. And then you will try the very last one. Yes, I'm doing success limited. And when I do success limited, that means you are doing it well. So the question one is success, right? And then question two is what? It's well. It's well. And then you are doing question two and three. Yeah, there's two questions coming, and that two questions they'll be in. That one you will try it for me. You will try it for me. So here we are solving this question without the footnote. Good. Without the footnote. So we are solving the question without what? We are just going to recast these items. And then if we're able to go through that, you'll be fine. So that after you're okay with the format, how to cast the item, then we just add the footnotes. Then we are done with the game. Good. So let's see. Good. So we are going to prepare profit and loss statements for the Bank statement. So now we are going to scan through the items one after the other. Then you tell me each of the items that I mentioned. You tell me where we are going to treat it. Each of all the items one after the other. You tell me where it will go in a trial balance. So first, now let's pick our trial balance. So we have the trial balance here. So revenue, where do you think revenue will move to? So that's the first thing in your the comprehensive income, right? Go. So that one they will know where to go. 372,000. Have you seen the currency? They're in three zeros, right? But you know, if you write your currency without three zeros, you are wrong. Agreed. Good. Now cost of sales, where will it go? Another revenue. What revenue is not there? Oh, okay, I like that. Under the revenue, like right after the revenue. Oh, okay, I like that. That means you go, there's no revenue, there's no under. I like the format. When you go like the tree under, right? If the tree is not there, then no destination. I like that, so I'll take that. So revenue, and that's great. Good. Now administrative expenses. Where do you think you go? Operating expenses. Okay, I'll take that. What about selling and distribution expenses? Where will it go? Okay, we can add the two, right? Then get one figure and present it there. Perfect, we are done. Good. Land and building at valuation. Where will it go? Land and building. Land and building. Mhm. You go to the statement of financial position, non-current what? Assets. Good. That's great. Then I can see plant and equipment at cost. But the same place, PP, the same place. Okay, good. Accumulated depreciation on plant. Where would it go? Accumulated depreciation. But this one, you will subtract it from where? The cost of the plant. You will subtract from where? The cost of the plant. And then you are done. Good. So you subtract this from the cost of the plant. So here, accumulated depreciation is 20,000. That means the plant, the, the current amount becomes, or the net value becomes 40,000. Good. So that's great. Now, intangible assets at cost. Where will it go? Intangible assets. Intangible assets. To come directly beneath what? The non-current assets, right? Great. Non-current assets. Okay. Then inventory. Where will it go? Inventory, current assets. Good. So then the next one, trade receivable. Receivable, current assets. So we'll go to current assets. Then trade payable. Trade payable. That's payable. Current what? Liability. Good. Then loan note interest. Loan note interest. How will it go? Loan note interest paid. Loan note interest paid. Where will it go? Now, loan note interest, you said that it will form part of what? The finance cost. But here, there's implicit trick, so I'll walk you through. This is what we will do. Have you seen how I've slowed down? Yes, because I want to grab the basics. Then I'll start moving fast. Good. Now in the trial balance for the interest, this is how you are going to meet the interest. So I told you that 15% loan. And then the loan value is, let's assume the loan value is 10,000. This interpretation, you pick a facility of 10,000, you are paying interest at a fixed rate every year. You are paying what? 15%. So this year, how much are you going to pay? So 15% on what? On this value, right? And that will give us what? 1,500. Good. But in a trial balance, sometimes you see loan note interest or interest on loan, and you see 750 here. How we seen it? 750. When you see this is the interpretation. The whole year, the loan note interest that they paid is 750. Whether the examiner had paid to it or not, whether the paid is there or not, it implies that this is the amount that you paid in respect of what? The loan note, the interest on it. So it means that out of 1,500, if you only paid what? 750. So how much are you owing?
Yeah, 750.
You are owing 750. So what will go to the P&L, the profit or loss? What if you incurred? What is supposed to pay? The entire amount. Therefore, what you've consumed must go to the P&L. Accrual. Expenses must be recorded as and when they what they incurred or they occurred. Now the whole year you've incurred 1,500, just that you paid only 750. So this 1,500 goes to where? The P&L. Are you owing them? Are you owing? Yes, you are owing a balance of what? 750. And we say owings are what? Liabilities. And this liability is a current liability. So you add it to your current liability. So that's how you do it. What if, yes, just 500? What's the meaning? Mhm.
Owing
You're owing 1,000. Perfect. Ends there. This trick is what? Implicit what? Trick. Good. It comes with question. We cannot set question without this trick. Now, what if here I pay 1,500 here and tell me what will happen? Tell me what will go to the P&L. Tell me what will go to the financial position. P&L, what will go there, and then the financial position, the balance sheet. That's the liability. What will go there? Sorry. Mhm. Now, out of the 1,500, how much have you paid? So the P&L, you have incurred 1,500. So the interest expense that must reflect in your P&L will be what? 1,500 because you've incurred 1,500. Are you owing them? You're not owing. Okay, so nothing go to the financial position. You are not owing. Okay, get it. Now, what if the worst case scenario? This one is not there at all. It's not there at all. That's the worst case. And IC examiner did that in November, May 2016. Level 1 financial accounting. That's how we did like that. And no notes. We didn't give them any notes. So what do? It means that even not even 1% of the 1,500 has been paid. The entire 1,500 you are owing is not paid. If you have paid, you will reflect on the trial balance. So they've not even paid one cedi of it. So the 1,500 will be in the profit and loss because they've incurred it. Now because they've not paid, it will still come under what? Current liability as what? Finance cost owing. So if you come here as 1,500 current liability as interest what? Owing. But if not pay any, good. I'll be saying it right. So this question, I'm going to try it for me. Now let's go to the question. In the trial balance, I can see loan note interest paid 1,000 there, right? But this examiner is very good though. It's a loan note interest and I added paid to it. Meanwhile, when you see loan note interest and trial balance, it means what paid. Whether the paid is there or not, it's paid. If you go to question number three, there's no paid, just loan note interest. Good. Now, what's the loan note itself? When you go down, 10% loan note. What's the value? 10% loan note. 10% loan note. That's right after. I like that. Someone has given me answer. Oh. Wow. They're giving me answers. Oh. Wow. It's 8,000. I like that. So 10% loan note. I like the answer. Oh. What's the 10% loan note is 80,000. It's 20. Not the 80,000. 80 is for equity. Okay, so it's 20, right? So the 10% loan note. So the interest will be what? So what will be the interest? The interest will be 2,000, right? That's 10% on what? On 20,000. And then how much have they paid? Out of the 2,000, they paid what? 1,000. So tell me what will go to the profit and loss and finance cost, and tell me what will go to the financial position as a current liability, if any. As a current liability, if any. Good. Any idea? Any? In short, what will go to the P&L? What will go to the P&L as finance cost? How much have they incurred? They've incurred 2,000, so they must be paid. That's all. And then later on, you consider that they come up again. How much have they paid? Are they owing or they paid all? And then look at the current liability section. So 2,000. So 2,000 will come here in the P&L as finance cost, and 1,000 will come to liability because they paid only what? 1,000. You are done. How we get it? Good. So that's fine. Now let's continue the game. Now we're on the 10% loan note. We've done that. Cash and cash equivalent 47. Where will it go? Cash and cash equivalent. It will go. Cash and cash equivalent. Current asset, right? Okay. Now that is the cash in hand and cash at bank. And any liquid asset. No. In fact, cash equivalents are some instruments that they look like cash, but they are not cash. But they can be converted to cash. I mean, like you have maybe 21 days bill. A bill that will mature in 21 days. In fact, you can consider as what cash, right? Good. So that is it. I'll be getting it. Good. So that is it. So that's a cash and cash equivalent. Now, equity shares of 1 Ghana cedi each. Where will it go? Equity shares. This is the same as what? Ordinary shares. So we go to where? Good. Under equity, right? So under equity, equity shares will come. Good. The next item is 10% loan note. We'll talk about it. Motor vehicles, 60,000. Where will it go? Good. So that's the PPE, right? To be part of the PPEs. And then tax provision for the year. Now here we should check the year in question very well. The year in question is what? 2019. Okay, let's go to the requirement. Check the top of the trial balance. What is the trial? What's the dates over there? The 31st March 2019, right? So when we append the financial balance at what 20 or 19. So the tax that is given to us is last year's tax. So for tax, in fact, leave tax, when we get there, it's part of the adjustment. So for that section, I'll just handle it until I do the adjustment, you'll be fine. So here we just compare the tax provided and tax paid. So here they've last year they made a provision of 11,500, but the tax that they paid was for 12,000, right? So is it under or over provision? They are for what? Under provided, right? But they made a provision of 11,500 and they paid what? 12,000. So they will under provide by what? By 500. That's good. Accumulated depreciation of on the motor vehicle 10,000. Down to subtract from where the 60,000, right? For now. Then provision for bad and doubtful debts. For this figure, you subtract from the receivable. But the things are becoming very we adding something there. Uh, so that is it. The dividend paid will go to the equity. That's retained earnings. Then you go to the retained earnings. This retained earnings is the opening balance. How we get it. So now we are done scanning through. So let's see. We are going to cast this item to into two: the profit and loss and the financial statement. So let's go to the board and let's start. Okay, I like that. So that's great. That's good. I've seen the answer. That's perfect. Now let's go to the board. Let's go to the board. So look at how you are going to do this, and then you'll be fine. So first, the name of the company. So the name of the company is Success Limited. Success Limited. Success Limited. That's the name of the company. Good. Success Limited. Then the requirements. So comprehensive income for the year. So statement of comprehensive income. Comprehensive income. Good. For the year ended. For the year ended 31st March 2019. Good. Now you check the trial balance and see if they've raised three zeros on top. So confirm for me the currency there was a reporting currency. And then they've raised three zeros, right? So do the same thing. Because Fred will tell you that solution to every question is the question itself. Good. So I have my number CD here. Here we are not tackling anything from the footnote. We are just going to recast this trial balance. So first, sales revenue. So I'll go to the question and see whether it's sales. Whether they call it sales revenue. So let's go to the question. How they stated it? They say revenue, right? That's also right word, revenue. So I write revenue here. What's the figure? 372,000. That is it. How big is it? Good. So 372,000. Then it's the cost of what? Sales. So cost of sales too, going for it in a question. So what's the cost of sales? The cost of sales is 217 100. Perfect. So look at that one too. So 217 100. And then you take it off, then what do you get? And that is the mhm. So friends online, what do we get? Good. 14900. What's the name do we have to call it? What's the name? The name that we have to call it? Unlooking, 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 unlooking. Okay, good. So gross profit, right? Okay, good. Gross profit. That is it. Good. Now from gross profit, where do you go to? From gross profit, where do you go to? Yes, I like that you mentioned it. Operating what? So operating expenses. Then when you workings, you add two items or you add, in fact, it includes all the expenses. But the two main are the admin and what? Selling distribution. That's it. So let me do the workings here. So workings. So the workings. So workings one. That would be operating expenses. Operating expenses. So let's go to the question. What does that mean? What is the admin? 60,000. And certain distribution is what? Is there any other expenses in the question, such as bad debts? In fact, all of these items, when we start adjustment, we are going to do workings on them, each of them. So take note for me. Good. That's great. Okay, so admin, here to please. Don't say that it's working, so you're not going to bring the 3 zeros. That one too, not 2 flowers. So admin is 60,000, right? Then selling and what? Distribution is what? So therefore you get, hey, sorry, 82,000. So workers number one, bracket W1, 82,000. Will I add? I'll add, right? I'll add, Fred have done it in again. You add, okay, very subtract, right? All expenses are subtracting. That's it. Fine. So what would be the answer? And what's the name of the answer? Mm-hmm. So 72,900. And what's the name I'm going to give it to? The name for it? Good. Then operating what? Profit. Okay. Operating profit. And from here, where do you go to? Yes, you go to other income. So you go to other income. So other income. So with the other income, you go to your trial balance. Let's go and scan to the trial balance. If you have other income there, there is no other income, right? But we strongly that question two and three, that one there are other income. Good. There is no other income. But when we're scanning through, we didn't mention other income. So there's no other income. But here in exams, please, bring if they do that like this, you give you a tick. They give you what? A tick for it. Why? Because that's someone's what intellectual property. The format for someone. They pay someone, it's someone's property, they bought it. So it must be standard everywhere. So that's all. What do you get? The same man. Oh. Then what's the name I want to give it to it? Okay. What's the name are you going to give it to this figure? Okay, so profit, this profit is before interest and what? Tax. So this profit is before Odoko and what? Malam Junction. So what's the next junction? Odoko, right? That's all. The next item was the interest. And what's the technical name for the interest? Finance cost, yes, or finance charge. They are the same. Finance cost, finance charge, or interest expense. If I can decide to use interest, you're also correct. It's not wrong at all. Good. Now let's see. Finance cost. So finance cost. Now let's do the calculation here. Here it's there's only one finance cost in this question. It's only one, right? That's a low note interest. So let's show the calculation. Yes, I like that, Madam Clementina. Good, good. Now, the working should be like this: 10%, right? On the loan note, because 10% loan note and the value is what? 20,000, right? The value is 20,000 average. Or you do the calculation for me. Okay. The Dickens, that is the 10% on the value or the facility, the principal, right? So 10% on the 20,000. That is 2,000, right? Will I add or subtract? Or add then? Yes. Interest expense. Thank you. But the game didn't work this time. Right, so work. Good. So what will be the answer? So 2070, 900. How we get it? Good. And what's the name? Do you give it to it? The name. Any name for it or does not been given yet? Hmm. So if you're going to Kaswa and you're before Odoko and Mala, and now you pass Odoko, so which town are you before? Mala. So profit before Mala. How do you get it? So profit before what? Tax. Perfect. So therefore profit before tax. Profit before tax. Good. For those of you who don't know Kasa, forgive me. Then what will be the next item? Income tax, right? So income tax, that's the company tax. Income tax expense. The income tax. So with the income tax, with this question, I'll do it. So don't need to worry. Then the next one you do it. If I do one for tax, don't need to worry. When you get here, even for now, if it's got wrong, I'll not be worried. But we're not going to deal with it. But the whole lot is standard on its own. So it's a standard on its own that we have to go and look after it or like go through it. So after we go through it or we went through it, fine. Now let's see. In this question, there was a tax provision of what? 11,500. And then there's a tax paid of what? 12,000. So we will have what? Under provided, right? Of 500. And under means expense. Let me explain this. Last year, the tax that you calculated, you said that, oh, GRA, my tax liability is 11,500. And GRA said, no way, your tax supposed to be 12,000. That's okay. Because the law does not permit you to decide the tax that you pay every single. It's in the hands of the GRA. But what you did was an estimate. You can estimate more or less. So you underestimated your tax. So next time, add it to your expenses, right? It's an additional tax expense for you. But last year, you did underestimation. What if you estimate the estimate was what 13,000, or you estimated for 13,000 cedis? So you have what over provided by what thousand. That is a gain or a plus for you. But last year your tax was more. So now this time around, let's offset it to that tax difference, right? That is it. So the income tax expense I'll put asterisk here because we have not done much about it, so we don't need to worry. So that would be 12,000 less 11,500. That will give us 500, and then you put it in brackets. So please, I'll come and continue on this section. Yes, about this semester. Let me come and continue here. It's how you are getting it smoothly because you're going to do question 2 and 3, and it must balance. You are doing question 2 and 3. Yes, 2 and 3. So make sure that you get every aspect of this so that when you're doing your question 2 and 3, you are fine. Now, okay, for me, what do you go to after the income tax? So now we after Malam. So where are we now? After Malam, then we learn what Kaswa, City, right? Good. So that would be profit after tax. Perfect. So anti-part, nice. Let me want to continue from this section. Good. So anti-part will be anti-part, anti-part, anti-part. 70 400. Then from here, where to go to from antipath, then we go to from antipath, where do you go to? Thank you. OCI, other comprehensive income. Yeah, do you have something in the question? Did you mention something like that? No, we did not. So what do I do? I just have to put that here. I'm missing. You put that there, and then you are done. You put that there, and then you are done. You are done. Good. You put that there, and then you are done. That's great. So what will be the last item? So we call it what? Total comprehensive income. Please, no shortcut reasons. So 70 what? 400. You double and add it, then you are done. I'll be good. Good. So basically, that is the end of the PN. We are going to do the financial position. And look at how we are going to do it. We are going to do the same format. And then you are what? Done. How is not difficult? Or difficult? It's not some way, right? There's some way. Fine. So friends online, if there's any question, can you let me know? And then that we are moving on to the financial position. Good. Okay, with that one, to the three protocols will work here. First, the name of the company. Second, The requirement check the currency or the reporting currency. Yes. Once we are in Ghana here, and then the company does not deal with foreign exchange transactions, we are going to use the cedi as the presentational currency gold. And then most of it is a functional currency too. And then you'll be fine. So still success limited. Success limited. So the heading will be or the requirement. The requirement will be statement of what? Thank you. So statement of financial position as at 31st December, right? Okay. 31st what? December. 31st what? December. 31st December. Let's check and see. Okay, good. Great. So let me put it on top there. So we started on current assets, non-current assets. Then we go to the PPA, property, plants, and equipment, no capital. Other than that, let me put the currency here in three terms. Now PP, you go and do workings. That will be workings number two. But before that, we can leave that one and do it last. All the workings, I want us to do it last. Why? Because if there are free marks there, I'll not be happy for you to leave the free marks and go and change the workings. Now listen, something that now I don't need any workings, present them first before you go and change the one with the workings. What if you go in the workings, you're not able to, maybe there was a note that probably kick you down, what do you do? So let's focus on the free ones. So aside PP in this question, what else do you think will come in here? Mm-hmm. Good. So we said that the non-current asset made up of what? Four items. What are they? PP, investment property, intangible assets, long-term investment. At least two of these must be present in the question. At least two. So let's see. So let's come through. Let's come through. Good. Let's come through. Let's come through. Intangible asset is there, right? Good. Intangible asset 30,000. So it's free. So I write intangible assets. Intangible assets. This is what? 20,000. For PP, I'll leave it. When I get time, I'll come back on it. So we are done, right? So that's all for the non-current asset. There's no investment property and there's no long-term investment. So that's the end. Then you quickly underline it. Don't write anything because this answer is wrong. But if you think time is going, time is what? Going. Examiner is saying that you have 1 minute more. What do? Don't worry. What's your best date? The best number on this earth is your date of birth, 1935. Done. Add your date of birth to it. Add it here. You're done. That's the best figure. Why? This is not an ISO. This feel like it's not an ISO. But if you leave it empty, you're insulting the examiner. You leave it like this, you're insulting the examiner. I'll add my date of birth, 1935. Good. my date of birth, 1935. Then you add it. Good. That's when you've not studied. That's when you don't come for class, but not you. That person does not apply to you because we we are working. So you get it correct. Now let's go to the current asset quickly. So current assets. So from this question, what are the current assets? From this question, what are the current assets? Inventory. So we're going to pick inventory. So inventory from this question will be, and let's go to the question. Inventory just right beneath the asset 41 200. So this one is copy and complete then. Yes. So 41 200. Then what again? Receivables. So trade receivables, right? Yeah, they call it trade receivables. So receivables. Receivables. So receivables is there. Let's go and pick the receivables too, which is 23,000, right? And we said something. We said that if there's provision for bad debt, let's check first if there's provision for bad debt, which we have to subtract the receivables from. So what's the provision? The provision is 5,000, right? Cool. So there's a provision for bad debt in the question. We look at it. Provision for what? Bad debt. And the receivable is what? 23, right? So let me do what? 18, but let me, you have 23,000 is the amount that people have to come and pay to you. Out of it, suspect that 5,000, you're not going to receive it. So, what would be the amount that you were expecting, or the expected amount? 18,000. Cool. And you tell us how it's got to 18. So, it's like the 25,000 less what? 5,000. And now give us 18. In exams, this one is yours, this one is yours. Finally, take this one. But if you do this one alone, bring the 18,000. Use your calculator. You punch the answer and throw in a final answer. Don't worry, you will be happy. You take 2 ticks home. 1, 2. You send it home. How do you get it? So you didn't send any ticks home. Let's leave it for the time now. But I thought that lessons are won at what? Police station, right? They too. And the lessons are won at police station, right? So don't do that for us. That would be fine. Now let's go to the next item. For the next item, we have to look at for under the current asset. Short-term investment, right? There are some in this question. Let's come to short-term investments. So for short-term investments, no, when we country we don't have short-term investment. We don't have short-term investment. Then cash what? In hand and cash at the bank. Then here they call it what? Cash and cash equivalent. So you have to make it good. So you record cash and cash equivalent. Cash and cash what? Equivalent. So cash and cash equivalent. So we call it cash and cash equivalent. Now be 40,700. So finally, when we put all together, what will be the answer? So the answer will be 99,999,900 if possible. 99,900. Then you underline it once. Then you relax. Then you come back again. Then you come and pick what? Equity, right? So I'll do that one at the other section for you. I'll do that one. Continuation. I'll continue at the other stretch for you. And in fact, I have to squeeze it so that you go there. I'll squeeze it so that you go here. I don't know, you'll be in trouble. So equity. But, so equity. So under the equity, what more do we have to look out for? Ordinary share capital, or it is same as equity shares. The word ordinary share capital is also called equity shares. It's also called equity shares. So they also call equity shares. Good. Then from there, what to look out for? So in this question, we have some in the question, and let's see the question. Let's see the question from this question. Do we have ordinary share or equity share or preference share or stated capital? How the examiner stated the same way we have to also what? State it. So they stated that what? Equity shares. So I write here equity shares. And the value is what? 80,000. Good. So I'll put equity shares here. Equity shares. And then 80,000. Equity shares, 80,000. Good. Here do we have preference shares? So equity shares, 80,000. You have preference shares. There's no preference shares, right? Good. If there's no preference shares, then what we have to do is we have to now move on to the retained earnings, right? Because if there's no preference shares, then for the financial position, here if there's no figure and you bring it, there's no marks for you. No mark for you. Like there's no, have you seen here? There's no investment property. So if maybe you want to investment property and put that shit, no, not mine. It's in the P&L, profit and loss for the comprehensive income. Why you have to bring it in through that shit, so that we mark it for you. And we get it. So these are the small ways that we do. So the retained earnings also open balance. That is the last figure. So let's go down the last figure. Okay, so that's great. 103,500. So now what we do is this. For the retained earnings, when you write it, either you can go and do workings and do it, or you can go you do it in. Open a bracket like this. The open balance, that's what you see in a trial balance, right? Plus the profit after tax, anti-tax, less what? Dividend paid. That's all. So these are the three items that will affect what? The retained earnings. The open balance is in the trial balance. So the figure they give it to you in the trial balance, that's the open balance. Then the profit that you had, the profit what? After tax, anti-tax. So it means that if that figure is wrong, it will follow you. It will be wrong. Good. And then you less what? Dividend from it. And then you are done. Take off dividend. So let's see if you have all this in the question, in the trial balance. So let's go to the trial balance again to see if you have all this. Okay. So the opening balance is 103,500, right? So opening balance is 103,000. If you like, I'm going to do workings and workings. So let's go do the workings. I'll do the workings too. So workings number 2. So opening balance of the retained earnings. But the workings 2 talks about retained what? Earnings. No shortcut to good retained earnings. open balance. In fact, in our class, balance but and balance carry down has been banned in our class. Carry down but down are banned on permanent suspension, replaced by open balance and closing balance. Good. Except if there's no confusion. Okay. So open balance and what closing balance. Good. So the open balance is 103,500. And then don't forget to bring your currency. Then what's the profit after tax, anti-tax, or profit for the year from what we had? We had 70,000 and what? 400. That's 70,400. If that figure is wrong, hmm, follow you. It will be wrong. So that's now let's continue the game. Then the dividend. Do you have dividend? Dividend from the trial balance. Let's go to the trial balance and see if the dividend there. Mm-hmm. There's dividend of 3,000, right? Dividend last but one, 3,000, right? Oh, that's good news. So let's 3,000. Put it in bracket. This becomes the closing balance. Closing what? What we said that the balance sheet list of balances, all the closing balances. So that will give us 170,900 again. So 100 and what? 70,000 and double underline it. So you come here and write retain earnings. For third examiner, please go to my workings number 2. You see the retain earnings there. Then you put what? 170,900. How do you get this? Now let's see the game. So we are not going to tackle no footnote. Look at the number of hours of money that we spend. What you are tackling a footnote and I don't get alone to. Yeah. So that is the end of the equity. That's the end. But yeah, there's no capital surplus in the question, or there is capital surplus revaluation reserve. No, we don't have revaluation reserve in the question. So therefore, we analyze it. So what's the total? So I'll take this section off. So kindly jot down the workings and you'll be fine. So the total is 200 and what? 50,000. 59 million.
Yeah.
So 250, 900. That's good. 250, 900. So from equity, where do you go to? From equity, where do you go to? From equity, where do you go to? Liabilities. Okay. Liabilities, so there are two types. Which one we have to come first? The non-current liability, right? Okay, good. So let's go to non-current liability. How we get it? Is that the question then?
No,
Okay.
trying to get everything.
The retained earnings. The workings that we did here, this one that we are carrying here, 179. The opening balance is 103,500. Then we add the profit made for the year, the profit after tax, coming from the comprehensive income. It was 7,400. Then we left the dividend, which was the travel of 3,000 from it. Then give us this figure. So we come and then place it back here. Then we add it, then we add that. Good. So that's it. It's time to take this one off. Okay, so when we go to what non-current or what liability. So non-current what? Liability. So let's see the non-current liability. Non-current liability. Bank loan or loan notes. Bank loan is same as what? Loan notes under the conceptual framework. I hope the conceptual framework is still with us. But the conceptual framework is gone. Oh, no. Okay, we'll come back. Non-current liability. So non-current liability, no substance. So the non-current liability, we have 10% loan note, right? 10% loan note. And the figure is the value of the 10% loan note, 20,000. Great. Now, what do you do again? Basically, for this question, there are two items that will go to non-current liability. 10% loan notes and then deferred tax. But here there's no deferred tax, right? So if there's no deferred tax, then we leave it like that. So it's only one for this question. It's only one. Good. In fact, this thing will not change. Even if we affect it with a footnote, this figure will not change. Still be 20,000. So originally, you know the position before the footnote, and then after the footnote, you know their position after the footnote. Good. Then you go to current liability. Current what? Liability. So the current liability will be mhm, the composition of the current liability. The composition of the current liability. Payables, right? Good. The trade payables. So what are the payables? So let's go to the question and pick the payables. The payable
10,000.
10,000, right? Good. Payable is 10,000, not this one. No. Is this one? No. Yes, this one 10,000. Good. So 10,000. So trade payable, then 10,000. Is there any other item? Wait. Oh, is there any other item for the payable? Aside the payable, is there any other item? Mm-hmm.
I want to ask a question.
To ask.
So
Good.
the trade payables in the trial balance
Yeah.
is at the credit side.
Is there any other current liability aside the trade payable in this question? Aside the trade payable, which is 10,000, is there any current liability? Is there any other current liability aside the trade payable? Is there any other? Mhm. The person that was called correct will be the accounting cracker of the night. Is there any other current liability aside the trade payable of the 10,000? Mhm. The person that will get correct will be what? The accounting cracker of the night. Mhm. Friends online. Friends online. What about the loan note interest owing? Loan note interest owing. Out of the 2,000, how much have they paid? They paid 1,000, right? So they are owing. And we said that that one was a current liability. Oh, someone said it right on the page. Yeah, it's true. Someone said it. Yeah. Wow. So they're giving me two suggestions. In fact, it's the interest of thousand. Good. Interest of thousand. That's good. They write interest owing. Interest owing. Please show working. That thousand is not in the question. Is 2,000 less what? Thousand. It's coincident that it's thousand. Good. So here will be thousand. So therefore, what is the total equity and liabilities? Total equity and liabilities. Or we can find the current liability first, but there are two. So we can find the current liability first and have what? 11,000, right? Then we have total. Finally, we go to total equity and what? Liabilities. Good. So that one will be current liability plus non-current liability plus what? Equity, right? Mhm. So the total equity and liabilities will be the sum of the current liability of 11,000 plus what? The 20,000 non-current, that's the total liabilities plus what? 250, that's the equity. How we get it? So that will give us 281,900. That's perfect. 281,900. Then we are done. When you do something like this, right, you are filled in the easiest one. Now left with the troublesome part. So let's get the workings for PP. Now this is how I want the format to be for the PP. Good. Can I put that in some place here? Okay, I'll still do it here. I'll do this section, just the equity. I'll take the equity section off. I'll take the equity section off so that I'll do the working for the last workings. The last working. So question 2 and 3. Please, I'll add extra 2 questions to it. They also come in. Making 4. So question 2 and 3. Where this one is empty, right? You're not touching any photo. You are recasting it from you, right? So we'll recasting baby fast. And then I'll pick them and then mark them up. When I done scan it. Just take a picture of it, scan it as one document. Forward it to me. If you scan it, if you send it one, it may scatter out. So put all of them in one PDF and then send it to me. That's all you are done. I just pick it up and then scan through small. Okay, now let's do the workings for the PP. So the PP, this is how I want the workings to be, or this is how we can do it. A simple version. Like me just the equity session. Just this section. I want to do the workings of the PP here. So the PP, this is what you will do. Workings number 3. Workings number 3. We will call it PPA. No shortcuts in this one. Now, you have to write cost here on simpler side. You write accumulated depreciation here. But this format, I will amend it as time goes on. I'll give you two formats and then you select one. Accumulated depreciation and then the carrying amount. C. Carrying amount. Chartered accountant. Come again. So as soon as you enter or you go to CA school, you will always come again. Either you write again or even if you charter, still come back again. Good. So that's the actual meaning of C. Come again. Continuous learning. Uh-huh. Now you go to the trial balance. You know all the EPs, right? The tangible non-current assets. So let's go and list them. So start from the very first to the very last. Sometimes the examiner can arrange them at a particular section for you. Like from the one doing it, I will not do that. I will scatter them. As I did this one. Look at where motor vehicle was. I just place it down there. Look at where I placed plant and equipment. So scan through, check from the first item to the very last item. Then you are done. Good. So now let's go to the try balance together. Let's go to the try balance together, and then you are fine. No question for me, friends online. So the try balance we have from the try balance we have I can see land and building at valuation 62,000, right? Okay, so I'll go and put it there. So right here, so land and building. The value, cost of valuation, 62,000. Please, you don't forget your currency. Oh. Good. There's 62,000. Then, do you have accumulated depreciation for land and building? Not at all. Or is inside accumulated depreciation of land and building or building? So dash, right? In fact, it's like this. This figure, less the accumulated depreciation, will give us a net book value. I will call it carrying amount, but that's a net book value. So that's fine. So let's do the what? 62,000, right? And don't forget your currency at all heading in 3 zeros. How to get it? Good. Now let's go and pick the next item. Let's go and pick the next item on the list. Cool. So the next one is plant and equipment. The cost is what? Okay, so plant and equipment 60,000. Is there any accumulated depreciation? Which is what? So I'll give it 20,000 and put it in brackets. And then finally, it will give us a carrying amount of 40,000. So I'll put the 40,000 here. And then, is there any other item? Let's go and see. Motor vehicle, right? Look at the distance. No, 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 no. I thought that, oh, that's the end. Let me also end. So motor vehicle is down, 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 down. So motor vehicle is here. The cost is what? And then the accumulated depreciation to is what? Look at that one, where that one also is 10,000. But they're going to 60 square, eh? 60, 62, 60, 60. So motor vehicle 60,000. Accumulated depreciation is 10,000, and then we have done finally. So putting this together, so in fact, we need this one first. So 62 plus 40, 102. So 100 and what? 52,000. If you do have time, learn and learn, then do this session. If you don't have time, this is what we want. Good. So 182,000. But here is 30,000. So now we are done. So we are going to now balance it off. So if I put 152,000 here, I'll get what? So now this and this becomes what? The non-current assets, right? 182,000. And finally, plus this one must give me what? The total assets. So therefore, total asset is what? Total assets is so this. plus what is total assets, and it must be 281,900. 281,900. Agreed. Good. That means it must be equal to the total equity and liability, 281,900, and it's balanced nicely for you. How we get it? In fact, even exams, if there's no balance, don't worry yourself. Exam questions are not meant to be balanced. Don't worry yourself. Good.
No balance of what? Okay.
Yes. So the total equity, because it's the equation, asset, all assets must be equal to what? Equity plus liability. So this total of this must be equal to total of this. Good. So that is perfect. And that's the end of the game. And this is how far the good Lord will bring us. Good. Please let me repeat the homework again. You are doing the question 2, that's success limited. Just the empty trial balance. Don't touch any footnote. No footnote. No footnote. Empty trial balance. And question 3, in Ubuntu, empty trial balance. There are 3 sets of questions that are coming. I'll add them to this and I'll bring it back. So that 3 sets, that one only count, start doing justice. Next week, I'm starting the footnotes. That's next week. We'll start with the footnotes. How to treat the footnote, and then you'll be fine. But before we start the footnote, you have to make sure that you balance one of these questions. Balance one of these questions. This one is empty, so that one balancing it is not a big deal. When we add a footnote to it, it will be more challenging. So try